First deflation in 22 years. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Well, it's happened. Australia has got deflation for the first time in 22 years. I can't say I can remember the last time it had it. I was probably a little bit too young. But we can see the latest CPI data that has just come out, the quarterly change. You can have a look. Definitely into the negative. So let's look at the media release and some information from the Australian Bureau of Statistics and then look at a few other things. The CPI fell 1.9% in the June 2020 quarter. The Consumer Price Index fell 1.9% in the June 2020 quarter, according to the Australian Bureau of Statistics. Chief Economist for the ABS, Bruce Hockman, said, "This was the largest quarterly fall in the 72-year history of the CPI." Just think about that. The largest fall in 72 years in the history of this entire measurement. The June quarter fall was mainly the result of free childcare down 95%, a significant fall in the price of automotive fuel, and a fall in preschool and primary education, 16.2%, with free preschool being provided in New South Wales, Victoria and Queensland, Mr. Hockman said. Excluding these three components, the CPI would have risen 0.1% in the June quarter. So, the extreme government intervention into the economy, providing free childcare, has driven us into deflation. And I wonder how many people have taken advantage of this, of the free childcare, the discounts in automotive fuel. I think this will be much more widely spread, but is it going to have the same impact when you're not traveling as much? You know, some CPI components recorded notable price rises on the back of increased spending. Cleaning and maintenance products, other non-durable household products, including toilet paper, up 4.5%, furniture, 3.8%, major household appliances, up 3%, audio, visual, and computing equipment, up 1.8%. So you can see people are, well, they're cleaning and they're preparing their homes for their home offices. The audio, visual, and computing equipment, people maybe need better computers. They may realize that building a desktop is better for a home workstation than a laptop. The annual inflation rate was negative 0.3% in the year to June 2020 quarter. Mr. Hockman said since 1949, this was only the third time annual inflation has been negative. The previous times were in 62 and 97, 98. The impact of the pandemic The pandemic impacted a range of CPI components in the June quarter, which were discussed in the article Measuring the CPI During the Time of the Pandemic. Importantly, there were very minimal impacts in the June quarter on the collection of data used to measure the CPI. Measures of underlying inflation were less impacted by the significant falls in childcare and automotive fuel, with the trimmed mean of negative 0.1% and weighted mean of plus 0.1%, both relatively flat for the quarter. Two additional insights from the June CPI have been released. We can look at those later. So what we'll do is I want to show this graph here that we can see. We can have a look at the Korean War boom. CPI was over 25%. The 60 to 61 recession, it was in the negative. Let me know if you remember this, guys. And then you've got 69 to 74, rises in real wages as part of the reforms for equal pay for equal work. I think my father mentioned that when all of a sudden it just shot up. And you've got OPEC shock, you've got the 82 to 83 recession, you've got the 91 recession, you've got the introduction of the GST. You know, there you go. Wasn't that fun? You've got the global financial crisis, and actually I have to move this image over. And now we have the pandemic here. So let's look at some key statistics from June. So the all-group CPI fell 1.9% in the June 2020 quarter compared to a rise of 0.3% in the March 2020 quarter. Fell 0.3% over the 12 months to the June 2020 quarter compared to a rise of 2.2 over the 12 months to the March quarter. And we can see the fall of it here. Let's have a look at the weighted average of the 8 capital cities and the all groups, the different items. Food and non-alcoholic beverages. So from March to June, it's gone up 0.4%. From last year to this year, it's gone up 4.1%. And I think anecdotally, a lot of us can relate to that food has gotten more expensive. What do you think? We've just ordered additional meat, so we'll have to see. I suspect the price is going to go up. We bought a whole heap and we just run out. It's a problem when you have a big family, big household. Alcohol and tobacco. Well, from last year, it's gone up 8.4%. 8.4%. And I guess people need their alcohol and tobacco to at least, well, deal with the stress. It's not the best method, but I appreciate it. Clothing and footwear is up 0.5%. Housing. So it went down from March to June. So housing has fallen. It's still up 0.1% from last year. And furnishing, household equipment and services down 11.2% from the June quarter, down 9.8% from that quarter. So health is down, slightly up from last year. Transport down. Communications down. Recreation and culture is down. Education down. Insurance and financial services are up 1.7% from last year, or the change. And CPI analyst series, we'll look at that later. So let's have a look here at the capital city comparisons. You've got all group CPI percentage change from previous quarter. We can see Sydney has dropped from previous quarter, so is Melbourne. Brisbane is down. Adelaide is down. Everyone's down. Everyone is down. Darwin looks like it's doing much lower than all the others. The consumer price index fell 1.9%. We've already looked at that. And here, the weight of childcare to the CPI of each capital city. So we can see in Sydney, it has, look at the weight of it in Sydney compared to, say, Adelaide and Perth, and even in Brisbane. Canberra's the highest. So all those civil servants getting their free childcare now. All of them getting their free childcare. We'll have to see how people deal with that. So let's have a look at how the media is addressing this. This is an article from news.com. So consumer price index falls off the cliff, thrusting Australia into a period of economic deflation. So we've got first mention of deflation. A crucial economic marker released today shows Australia's economy is going backwards and performing worse than it has in decades. Australia's consumer price index has fallen by 1.9%, putting the nation into a state of deflation for the first time in 22 years. The Australian Bureau of Statistics said the June quarter slump was the largest fall in the 72-year history of the CPI. CPI measures the rate of Australia's inflation and how fast the economy is growing through consumer consumption. Now, some of the issues with the methodology used to measure CPI is that it excludes certain things. Second-hand houses, it's excluded. According to the ABS, Australia's annual inflation was negative 0.3% for the year ending at June 30, showing the economy was contracting as a result of the pandemic. This is the largest quarterly fall in the 72-year history of the CPI, economist Bruce Hockman said. Since 1949, this is only the third time annual inflation has been negative. The ABS said the significant fall in the June quarter was fueled by falls in childcare, education, and petrol consumption. We'll have a look here. Let's see if there's anything else that we're taking here. Let's have a look. AMP senior economist Diana Musina said large price falls were to be expected from government initiatives such as free childcare intervening in normal spending patterns. A lot of the factors are temporary and prices will bounce back in the September quarter, but by less than the fall in the June quarter, she said. Westpac senior economist Justin Smirk said the June quarter results represented a deflationary pulse to the Australian economy, which will likely persist while key commodities such as crude oil remain low. Despite many of the shocks being one-offs that are set to reverse, the pandemic shutdown has shifted what we thought were signs of a recovery to a broader mixed outcome with signs of an underlying deflationary trend in many series again in the third quarter, he said. Westpac expects the third quarter of the 2020 calendar year to bounce by 2.1% as economic pressures continue to alleviate. So let's have a look at another thing. That's how the media is taking it. And we've got here deflation. And this is from Investopedia. Now, you've got the RBA, they always want to reach a certain inflationary target. You know, they've got a target that they haven't reached, but they want to reach it. And part of the understanding of that is to create an incentive for you to spend your money. If inflation is too high, well, then you'll just go crazy. You don't want your money. The risk is you get hyperinflation. You know, hyperinflation where people are taking wheelbarrows of money to buy things. Where you've got Zimbabwe just printing money like stupid. If you get deflation, there's a disincentive for people to spend. Why? Well, we can see it. We can see it in the solar industry in Victoria. And I'll share this story with you. You've got an industry now where the government gives people up to 50% rebates. You'll get 50% of your money back from your solar panel investment. But there's only a certain number that go out each month. So every month you put your thing in and you might get a spot, get that 50% rebate. I don't remember how many there are. Let's just say 100. So you sign in the website, first day of the month, boom, they're all gone within 2 hours. So what do? You think, you know what, I'm gonna pay extra for that solar. I missed out. Oh well, you know, I'll just pay double what I would pay otherwise. No, you're not. You're not going to be silly. You're going to wait. You're going to wait until the next month rolls over. So what the government has done by implementing this policy to help this industry, they've capped the number of installs, effectively capped it every month to their quota position because it's so generous. And there's no the disincentive. The opportunity cost of waiting that extra month and having another chance at 50% deduction compared to the power saving, it's inconsequential. So you're going to wait. And this is the thing. Their concern is if we start reaching a point of deflation, people are going to rein in their spending and hold on to their money because they're going to get more value for their money over time. What do you think, everyone? Because there's different causes of deflation. You want items to get cheaper. You want items to get cheaper because that improves your quality of life. My iPhone I have here, I mean, this is crazy. The cost of this device and what it can do compared to a computer just a few years ago. And it's usually the industries where the government isn't directly involved or isn't subsidizing where you get the best improvements and innovations. Even have a look at SpaceX and compare it to NASA just with the cost of their launches. So let's have a look at this. What is deflation? Deflation is a general decline. Why am I saying discipline? Is a general decline in prices for goods and services, typically associated with a contraction in the supply of money and credit in the economy. During deflation, the purchasing power of currency rises over time. And here's the thing, are we really having a contraction in the supply of money here? What's happening? How much money is getting put out into the economy? And think about it. If you removed all of the government stimulus and would still be inflation, just a tiny bit of inflation, what's that going to say for consumer confidence? Deflation is the general decline of the price level of goods and services. Deflation is usually associated with a contraction in the supply of money and credit, but prices can fall due to increased productivity and technological improvements. Whether the economy, price level, and money supply are deflating or inflating changes the appeal of different investment options. And I'll let you go through this in greater detail on your own. But as you can see here, guys, well, we're definitely in interesting times. And we'll have to see how it bounces back after all the government interventions and handouts for childcare disappears. As always, let me know your thoughts and opinions. Are you concerned that CPI is going down? What do you think the Reserve Bank will do to try and prop it back up? Do you think they will ever reach their goals? Is this just telling us that interest rates, the cash rate, is going to stay very low? Thanks for watching. Let me know your thoughts and opinions down below. If you're a fan of the channel and want to support us, there are a few ways you can. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy our merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care. I'll see you next time.